assets in cash. That was over the summer. Have you ever done that before? What prompted you to be so heavily into cash?
Well, in 1987, in the 9 days before the famous crash, we were 100% in cash.
Oh, your
So,
clients must love you then.
right,
In
right.
87, right?
And in 2008 and late 2007, we were very, very heavily in cash, pretty much entirely from time to time. But we were fully invested in early and mid-June of this year. And then at the end of June, there came the comments by the Fed, which really perturbed the markets in the U.S. particularly, but also globally. So you had the unusual confluence of stocks selling off sharply and all kinds of bonds selling off, including treasuries as well as junk, which again is quite unusual at the same time.
So that was then. What prompted you now to take another look at the market and find opportunities in fixed income?
All right, we're very disciplined trend followers. We buy only into uptrends, and we love it when markets get very oversold on a short-term basis. We hate to be in cash even temporarily. So we began to get a lot of green lights in a variety of asset classes. One that we'd been looking at in particular was muni bonds because they got beaten up much more than other varieties of bonds. And so we began to buy, we actually began to add in floating rate, I think, first, and then we had buy signals in high yield corporate bonds, and then more recently, everything from Ginnie Maes to treasuries. I'm not sure about foreign bonds. Emerging market debt, yes.